Join me as I dive into the world of investing and challenge myself to figure out if Cava is actually a smart investment. Cava, the fast casual dining chain, has been making waves in the restaurant industry with its fresh and healthy Mediterranean-inspired menu. As an investor, it's hard not to take notice of its rapid expansion and loyal customer base. But the question remains, is Cava a smart investment? In today's competitive landscape, it's crucial to separate the hype from the reality. The restaurant industry is notoriously cutthroat, with new chains and independent eateries popping up left and right. For Cava to sustain its growth and profitability, it needs to stay ahead of the curve and differentiate itself from the competition. One of the biggest challenges it faces is maintaining consistency across its locations, ensuring that every customer has a great experience regardless of where they dine. Another obstacle is the changing consumer landscape, with more and more people opting for meal kits and grocery delivery services over dining out. Additionally, Cava must contend with rising food costs, labor laws, and real estate prices, all of which can eat into its profit margins. The company's ability to navigate these challenges will be crucial to its long-term success. As an investor, it's essential to consider these factors and how they might impact Cava's bottom line. Cava's business model is centered around providing healthy, affordable, and customizable meals to customers in a quick and convenient manner. Its recent performance metrics have been impressive, with sales growth and increased brand recognition. However, the company still faces significant competition from established players like Chipotle and Panera Bread. To stay ahead, Cava needs to continue innovating and improving its menu, marketing strategy, and customer experience. Market trends also play a significant role in Cava's success. The growing demand for healthy and sustainable food options, as well as the rise of digital ordering and delivery, are tailwinds that Cava can capitalize on. On the other hand, increasing competition from meal kit services and grocery delivery platforms could pose a threat to its growth. As an investor, it's essential to understand these trends and how Cava is positioned to take advantage of them. Cava's unique selling proposition lies in its commitment to using high-quality, sustainable ingredients and its ability to cater to a wide range of dietary needs. These factors could make Cava a compelling investment opportunity for those looking to tap into the growing demand for healthy and convenient food. Analysts expect revenue to reach $1.75 billion in 2028, that is an average revenue growth of 15.7% annually. When it comes to earnings per share, they expect 81 cents in 2028. That is an average growth of 17.3% annually. Cava's stock price today is $141. That means that if you buy the stock today, you are paying a price-to-earnings multiple of 174 for 2028 earnings, if these assumptions come true. I think that sounds very expensive if you ask me. In conclusion, Cava's investment potential is closely tied to its ability to navigate the competitive restaurant industry and adapt to changing consumer trends, while maintaining its commitment to quality and sustainability. As an investor, it's essential to weigh the pros and cons and consider the company's long-term prospects. Thanks for watching, and I'd love to hear your thoughts on Cava's investment potential in the comments below. Don't forget to check out my other videos on investment opportunities and subscribe for more content.